RBI, in its recent financial stability report, has warned that under severe stress scenario, India's bad loan ratio may hit 14.8% by September 2021, bringing the idea of setting up a bad bank on the table once again. Now, what is a bad bank and what are the other possible options to solve India's bad loan crisis? Let's find out on India Revival Mission on Times Network. I'm Heena Gambhir. Joining me today is Dr. Arvind Virmani, who is former Chief Economic Advisor, Ananth Narayan, Associate Professor, SP Jain Institute of Management and Research, and he is also Additional Director, Yes Bank Board. We have with us Dr. Fareed Ahmed, who is former ED, Punjab and Sindh Bank. Thank you very much, all of you gentlemen, for joining us here on India Revival Mission on Times Network. Before we talk about the solutions as far as solving India's bad loan crisis is concerned, Ananth Narayan, I want to ask you, how bad is India's bad loan crisis, in your opinion?
Well, thanks for having me, Heena. And look, what is the broad objective? The broad objective is to have a financial services ecosystem that's capable of financing our pretty ambitious growth plans and are, helping us achieve our growth potential. Now, is the financial system at this point in time geared to do that? Not at all. It will survive. There's no question of survival of the system, but we needed to run a marathon, not just survive. What comes in the way of financing the growth? Plenty of things. And as you rightly pointed out, the level of NPAs is one of the issues, but it's not the only issue. It's the starting point. You are sitting with that burden. That burden has to be taken off your back. Thereafter, lots of other things have to happen in the form of changes and reforms to ensure that the system becomes strong again. So a bad bank is a part of the solution, in my opinion, to try and resolve or to remove the burden of the NPAs from the banking system so that commercial bankers can get back to the business of actually creating loans and funding businesses. Alongside that, hopefully, a bad bank will also try and help in the recovery process, speeden up the recovery process, because the size of the loans, bad loans, is tremendously large. If RBI is saying it could be 13.5 to 14.8%, add to that what has already been written off, which is another about 8% or so. So the actual bad loans are well about 20% of NPAs, of advances. And that's not a small number to manage. So broad answer, there are multiple problems that come in the way of the banking system supporting growth in this country. NPAs is a part of the problem and requires a solution. Hopefully a bad bank could help do that, but it's not enough. You also need lots of other changes, including reforms of both governance as well as public sector enterprises, to ensure the system is capable of funding growth again.
Well, absolutely. Write-off is another big issue because in 2019-20 only, we saw a record write-off about 2.37 lakh crore rupees. Dr. Virmani, in your opinion, is the concern valid? The way the bad loan amount is expected to balloon in September 2021. Should we be extremely bothered? Because, 2020 was a difficult year. There was a moratorium as well of about 6 months that was given. So wasn't it something that was expected?
There are two aspects. If I take off from what Professor has just said, the 8% write-off is not a problem for the banks, but it's an opportunity in a way if we set up a proper ARC system, bad bank, whatever you call it, and create a market for bad loans, bad banks, etc. So and second point would be that 14.7, if I recall correctly, what has been written by RBI and
14.8%, yes, sir.
It's a conservative estimate. So I believe him. I've heard this from the governor myself. So I would say, as far as the new problem is concerned, it's not going to exceed that. That would be my judgment at this point. So the third point I would make is, and of course, Professor knows that very well, has pointed it out many times, the peculiarity problem which India has compared to other countries is that 65% or more of the banking system is owned by the public sector. And so reform of the public sector is kind of intimately intertwined with this issue of bad loans, etc., etc. So the question for the budget for me would be that would it kind of have a comprehensive solution of this public sector management, NPAs, etc. problem. And just to point out again, well-known difficulties, the problem of bad loans in public sector is particularly peculiar because these have to be accountable not only to government but to parliament and all that. So that is why we've been unable. We are going back and forth. So many systems proposed, etc. Everybody in government has a different view, and that's understandable. But at some point, some solution has to be found, which may not be perfect, which but it's more important to get it done and get the process started. Is what I would look for in the budget. That at some point you have to take the bull by the horns, even if some 30% of people say this is not a perfect solution. You'll never find a perfect solution.
Right, absolutely. And why the bigger problem is the public sector banks, because according to RBI's estimate, only the NPA ratio of public sector banks only could actually balloon to about 16.2%, which is even higher than the overall estimate that we've got by September 2021, and that too under the baseline scenario, which is about 13.5% for the overall banking system if we look at right now. Dr. Farid Ahmed, in your opinion, what could be the reason behind this kind of an increase in NPA? You've served as the ED of Punjab and Sindh Bank. So, in your opinion, how much have things really worsened?
Mostly the causes of NPAs are many. Maybe external causes are specific factors. Macroeconomic factors like economic downturn, fall in prices, and dumping by China. These are all the macroeconomic factors which has happened. But in 2007 and 8, when global financial crisis has happened, we felt that we are insulated from that global financial crisis. And at that time, the GDP was growing at 8 to 9% or 7+%. So we were going on investing, and the promoters were with more ambitious expansion of their capacities and unrelated diversifications. This has led to the beginning, this has sown the seeds of NPA during that period. Moreover, the policy logjam during that period has given a chance to become more and more NPAs, and the controversies like the coal scam, power and telecom, this has added to the more NPAs. But recently, the issues of the non-public financial corporations, non-banking corporations, NBFCs has added more and more NPAs in the recent past. In addition to the macro factors, the specific factors like over leverage by the promoters and over optimism in expectation of the returns, and from the banker's point of view, no doubt, inadequate pre-sanction appraisal and also the inadequate post-sanction monitoring, this has led to the NPA position. In addition to this, as my colleagues said, the COVID-19 has its own impact on the economy. The government has taken a considerate decision whether the livelihood is important or the life is important. So lockdown has been implemented, and it has led to the further slowing down of the economy. Because even prior to the COVID-19, our country was affected with a slowing in the economy, and it has added after the lockdown and all, the further it has deteriorated. If you see that GDP growth in the last year, 1920, it is about 4+, particularly in the last quarter, it was 3, and it is estimated that it will be much negative by 8 or 9% during 21-22. So keeping this is having a lot of impact on the asset quality in the coming years. As you said, and also my colleagues said that the 16.5 in the public sector or 13.5 as a baseline estimation for the banking industry as a whole, it appears to be less because the entrepreneurs or the persons who opted for the moratorium are more than the 50% of the outstanding. Right. Even out of that, even 5% goes as a NPA. It is a substantial increase in the NPA will happen.
Absolutely. Now, talking about the solutions, Professor Narayan, you've briefly spoken about the concept of bad bank. Why is it being considered like a magic wand, as if the moment it is set up, it is going to take away all the problems that banks in the country are facing? Why there is so much importance that's being given to this concept of a bad bank?
Well, if that importance is being given, Heena, that's wrong. And as Dr. Virmani said correctly, there is no perfect solution. Any solution you keep on the table, there'll be at least 40 people who will criticize it. But I like the framework which was described in the run-up to the 2016 budget the best. It talked about 4 R's, Heena. It talked about recognition, it talked about resolution, it talked about recapitalization and reforms. I think that 4R framework applies even today. And that would be the right set of solutions. And there are various ways of doing it. I do believe bad bank could be one of the vehicles as part of this 4 Rs. Okay, but it's not alone. It's not enough on a standalone basis. On the first part of recognition, look, we did do an AQR for banks, but unfortunately, after COVID-19, this asset quality review, unfortunately, after COVID-19, there is more uncertainty because there is forbearance, there is moratorium and all of that, which we don't know what the final numbers will look like. The fear is that amongst MSMEs and retail, the news could be on the worst side. But on the large corporate side, things seem to be good. But we don't know simply, Heena. We have to wait to see how the numbers pan out, including for NBFCs, as Dr. Ahmed also pointed out. Second part is on the resolution. Now, there will be people who say we don't need a bad bank because we have a good IBC. And IBC is a good piece of legislation. By try and create something around that. There, my point is, listen, IBC is geared for regular NPAs as they arise in the course of business. But we are talking about a huge stock which no bankruptcy court in the world can actually manage. It's just a gigantic size at this point in time. If you're talking about 20%, including the written-off NPAs, right? So there we do need a one-off kind of a solution. The problems with the bad bank are many, but if we can ensure that the assets are transferred at the correct market price, if we can ensure that there is an incentive to ensure that correct market price, and if we can have the party which now holds that particular assets in a position to resolve those assets better, in this case the government, you're talking about power assets, you're talking about real estate, you're talking about road projects, there frankly ownership by the government might help because you might have to change some regulations and other parameters to get a revival of that particular project. So which is why I think a bad bank will work. But to the broader point, it's not enough. Even after, if you do a bad bank and resolve and get a resolution which is speeded up, you will still need recapitalization and more importantly, reforms. Dr. Virmani made the point, 60% of banking is public sector banks. They are not having a level playing field. They are under the Nationalization Act. They're under the 3 Cs of CAG, CBI. Mr. Dinesh Khara earns 30 lakh rupees of salary for managing a 40 lakh crore balance sheet, which makes no sense. There's no market, payment being done for these people. So you need a level playing field. Lots of reforms, including what was described in the PJ Naik committee, seem to make sense. The Bank Investment Corporation, etc. I think that is required. That is one part to clean up the PSU system, make it more autonomous and more efficient. You also need governance reforms. This is not a governance reform. There are frauds happen everywhere in private sector banks and foreign banks everywhere. So you need things like this, auditors, credit rating agencies, boards, RBI supervision to be improved. Work is happening on that, to be fair, and that needs to happen separately. So it's a whole package, It's not just one bad bank or one magic wand anywhere. And I think the 4R framework captures that package well.
Okay, so we need to be more focused as far as this 4R framework is concerned. That's your view, Professor Narayan. But Dr. Arvind Virmani, coming back to the idea of this bad bank, which is being discussed quite extensively, in a way, it is going to be like any other asset reconstruction company. So if we already have an asset reconstruction framework going on, why do we need a separate and a similar kind of a structure?
Yeah, so let me give again for your viewers a broader perspective. You see, the basic issue is to create a market for bad loans. And we know from economics of natural resources, etc., for unique assets, because each bad loan has a large element of uniqueness to it. So the best way to do it is a kind of auction market, like we auction a spectrum or we auction a natural resource, because each pocket of natural resource, we know the general value, but each specific pocket of a natural resource has a different value. So think of it like that. So the question is, one way to approach it is, can we set up an auction mechanism which Parliament will approve as far as the public sector banks are concerned? For that, you have to have the whole framework of the market. And that's very difficult. You can't instantly create a market. Markets in US, EU have taken long time to develop. But that is one approach. The second approach is to isolate or protect the individual public sector banks. If they do it one by one, they can each be questioned. Somebody in Parliament will say, or somebody in media will say, this guy took money to set the price, so and so. So what we are trying to do, or what people who propose a bad bank is trying to do, is to put a intermediary so that all the assets of individual banks go into that, and therefore people can't accuse that person of trying to protect your own old borrowers, etc., etc. So conceptually, that is the issue. And as I said, as far as I am concerned, whichever mechanism is acceptable, and maybe a combination of these could be done. Once you put these assets into the bank or whatever you want to call it, then they could auction it to ARCs, etc. But both legs of that has to be planned and ready. The market is not instantly going to develop. I mean, there may be, a professor can tell you more accurately, there may be 20 ARCs in operation, but they are not really operating. They are there on paper. So those details, have to be worked out before, if the whole idea is to be successful.
Okay. And Dr. Farid Ahmed, in your opinion, is there a need for a bad bank in India, or do you think perhaps, more arms should be given to asset reconstruction companies?
As far as the bad bank concept is concerned, I concur with the use of Dr. Mr. Ananth Narayan and Dr. Arvind ji. But I think that bad bank is very much needed. It is essential at this juncture, because the past experience of so many foreign countries, Sweden, Indonesia, and all those countries, even in China, the bad banks they have utilized. Bad banks are required not for the permanent purpose. It should be established for a temporary period of 8 years. And the assets should be transferred from the banks, so that the bank's capital will be released. Because as Mr. Ananth Narayan ji was telling, that capitalization is important. Yes, whether it is a bad bank or otherwise, the capitalization is must by the government. So instead of not only capitalizing the banks, the government can capitalize the bad bank, and the non-performing assets may be transferred to the bad bank, so that the aggregation of the exposures will happen, and it will conveniently can auction or take a decision. Because no doubt the IBC has become a very successful within 3 years. It has recovered about 1.89 lakh crores as compared to the other mechanisms. It has been very successful in shortest possible time. Okay. But keeping the huge number of cases, IBC cannot handle. So there should be a pre-pack mechanism should be found out. And also, if these NPAs are transferred to the bad bank decision taking will be better, and this bad bank should be supported by the professional teams. And this bank, as I said earlier, it should be for a temporary period of 8 years or 10 years, so that a cut-off time up to 22 March, whatever the NPA, above a threshold level of NPAs, all can be transferred to the bad bank, so that the bad bank, with the support of the professional team, can take decisions and they can auction either to the other ARCs or to the interested entrepreneurs. But another prerequisite is the development of the platform for the sale of the stressed assets. This is important. In my opinion, bad bank concept is very much essential at this juncture.
Professor Mr. Narayan, I want to give you the last word now. What happened in 2020 when we all had coronavirus pandemic coming into our lives, that was unprecedented, and that's the reason why, one of the reasons, of course, that our NPA ratio is expected to balloon over the next few months. How can India insulate its banks, the banking system specifically, from these kind of shocks in the future, instead of always trying to find solutions after the problem has come? Is there any way to prevent it from happening in the first place?
Well, Heena, this pandemic was a 1 in a 100-year event. I don't think we can ever have enough capital or enough safeguards to protect against something like this. Look at what the rest of the world is doing. Everybody is pumping in money on a fiscal and monetary perspective to try and save the entire financial services ecosystem. We can never plan for a 1 in a 100-year event like this. But the broader point is right. What we don't want is a solution right now, and then we get back into the bad old ways of again creating bad loans over a period of time, and then 10 years later again wait for taxpayer money to come and bail us out. I think that's a very, very key point. Now, which is where the whole point of reform comes in. It's one thing to find a one-shot solution right now, a one-time solution right now, and I think a bad bank, like the other speakers have mentioned, fits that bill. But to ensure this doesn't repeat again, we need a couple of things to be in place. One is we need truth, right? We knew that bad loans were coming up even in 2012. In fact, Ashish Gupta, we spoke of the bad loans way back then. And the actual recognition happened 2017, 2018, which is for a long, long time. So we need better disclosures. We need better governance. We need rating agencies, auditors, boards, RBI supervision, all of that to work better, right? Which is why the second set of governance reforms becomes extremely important. Look, it's okay to make a mistake. We are a growing country. We can't beat ourselves up every time we make a mistake. But we can't repeat the same mistake again. And we have to learn from the mistakes that we've made. The third part, importantly, is public sector banks. As Dr. Virmani mentioned and Dr. Ahmed mentioned, public sector banks somehow seem to have this penchant for having large NPAs. Now, I know my friends in the PSU banks will beat me up for saying this, but there is a problem in the structure itself, right? If you have New Delhi and DFS and bureaucrats and politicians able to do telephone banking or do Shamiana banking, there is a problem. You have to let professional bankers operate professionally. And that separation between Delhi and it doesn't mean privatization, by the way. DBS is owned by the government of Singapore, but there is a distance between the government of Singapore and the bank itself, so that the bank on a day-to-day basis operates professionally and independently. You need that in India as well, which is why this PJ committee recommendation, including the formation of a bank investment committee, a bank investment company, and coming under Companies Act rather than Bank Nationalization Act, giving them operational freedom is important. So you're absolutely right, Heena. Finding a one-time solution to NPAs is one part, but if we don't accompany it with reforms to ensure the cycle doesn't repeat again, we will be condemned to repeat history.
To ensure that even next year ahead of the budget, we are not discussing this issue of bad bank or solving India's bad loan crisis, I think it's the reforms in governance specifically, that's the need of the hour. And we'll see what budget 2021 is going to bring for us as far as the banking sector is concerned. Thank you very much, all of you gentlemen, for joining us here on India Revival Vision.